Okay, 124 points higher on the Nifty. You're with us here on a fresh new edition of Midcap Radar. The market is up and about. The Midcap index is up 2% and the small cap index is up almost 2.5%. So there is absolutely no let up so far in the last many hours that the market has been trading. Global cues have not been all that great. Regional, stock markets, etc. Although China did see a bit of a bounce higher compared to the big sell-off we saw on Friday. But otherwise, equities in the region, not exactly an exuberant kind of a day. With me, my colleague Reema. Reema, afternoon.
Hi, Prashant. Afternoon. India goes to the poll and the market goes for centuries. So it's now, 350 points on the Sensex. So that's a triple century. And the Nifty too at the high point of the day. And what's happened in the last 15 minutes are cement and steel stocks moving higher. So pull up an Ultratech Cement or a Grasim or a JSW Steel, SAIL. Across the board, you can see an uptick coming through. Let's get a handle on what the early European rates are in Friday's trade. They had ended with cuts of close to about 0.5 to 0.7% on global growth banks. This morning, they've bounced back along with the rest of the Asian market region. So FTSE and the CAC are reversing Friday's losses and currently higher by close to about 0.5%. Let's see if that provides that added fillip for our own markets in the second half of the trading session. A quick run through of the top headlines. Markets break out of a 3-month range to trade at 2019 highs, backed by strong global flows. Key indices surged to the day's high, led by heavyweight Reliance, ICICI Bank and State Bank of India.
The mid-cap party continues with the index outperforming the key indices to gain 2%. Advance decline hugely in favour of advances. Big gainers include stocks like Bharat Forge and Union Bank.
The currency market charges ahead as the rupee is strong on FI flows, keeps the IT stocks low. Bonds trade higher, pushing up public sector banks.
Experts trash rural recovery stories, say all state and central farm transfers put together will have less than 0.5% cumulative impact or addition to rural demand. Former Agriculture Secretary Siraj Hussain says he does not see any improvement in agricultural product prices.
Jet Airways gains. The CNBC-TV18 learns that the Etihad board is set to meet today to discuss Jet's revival plan. The board is likely to take the final decision on fund infusion today.
Okay, Ashwini is with us at 1:30. Ashwini, I heard you at, 10:30, at 11:30 we spoke and your messaging has been clear. Time to take profits. Market is not coming off. If anything, it's added another 10-15 points. Not much. Still same messaging, or you want to alter it in any way?
Well, the day to buy was the day the generals were trotting on the screen. 10,700, you are now at 11,150. No clouds on the horizon, no bad news. People who are buying today are buying into an exuberant market. Now, when this rally will stop 100 points higher or 150 points higher, that is tough to say. So at best, take 50% off and ride the other 50%. Risk, when there is risk in the market, it's not visible. And when it's visible, then there is no risk in the market. That's how I look at things. This is, a 8th or 9th up day. So after 9 up days, if you are buying, the risk reward is not favorable. Sure, you can have a rally and, now people believe that maybe 2 months of clean run may be there. But definitely not to overload positions right now. Take some off and wait for the real thing to start. It's just dates. Nothing has changed.
What would you trade in terms of stocks, Ashwini?
See, Tata Steel is a buy with a stop of 515, target of 535. BEML is a buy with a stop of 910, target of 945. And India Cement is a buy with a stop of 98, target of 110.
In which stocks, Ashwini, would you recommend profit booking?
See, wherever, these mid-cap stocks have run up 25, 30, 40% without, much really changing. I think those are places where you should take some off and then maybe add on later on when stocks give back gains. According to me, there will be profit booking within this week because now, things are kind of moving on their own steam. Momentum is fairly strong. maybe next 100, 150 points, we should see some amount of profit booking coming in.
And when the reversal comes, Ashwini, is it going to take us back to where this rally started, or you think it will be an opportunity to buy that dip which comes? I mean, if this is a pre-election rally, it has started pretty late as compared to previous instances, the last 3 general elections. So you got basically 1 month to do whatever before the election start.
See, the idea is that a bit of the election rally has happened. I don't think the global slowdown, etc., is helping our Indian market. So that way, you can say that the rally started at 10,700. And my sense is that each situation is different. Last time, Modi was a given. So that rally started in November. This time, it's not so clear. 2009, we had no idea what will happen. So, let's not compare these things. These situations are different. The only thing is that you are having a 8-10% type of move. Maybe the market is saving some in case you get better election results than expected. Then you can get up to 12,000. But it's not so clear, and maybe another couple of 100 points. We may not go to fresh highs here.
By the way, I just want to point out that even as Europe has opened up on a steady note and firm, in fact, currently higher by 0.5%, the Dow futures is still down in excess of 100 points. That is suggesting the weakness may continue. Of course, very thinly traded right now, the Dow futures, but an indicator nonetheless. Ashwini, any disclosures?
We have, ETFs, the Midcap Nifty Junior ETF. So that continues to keep us long, but on a futures basis, we are more nimble and taking profits as they're available.
Thanks so much for joining in. Let's address the global cues. Manish Singh of Crossbridge Capital LLP joins us on the phone line. Manish, afternoon. On one hand, you've got downbeat global growth. The latest, the number which added to the weakness in global growth was the jobs data. So does that suggest there is some weakness ahead for the markets, or do you think the markets are likely to say that, the central banks are now going to be dovish and therefore, flows could be higher towards, say, emerging markets, money could get cheaper, and therefore there is a reason for the markets to be resilient and maybe continue with the rally that they've seen. What line is the market going to take now?
Yeah, so I agree with the latter part of what you say. I think it is being seen in the market as it is going to stop central banks from really getting aggressive. Now, with respect to U.S. Fed, they have been very clear that they are not going to be very aggressive with reducing the size of the balance sheet. And when you have the FOMC meeting on 20th of this month, that will be confirmed. We saw from ECB that they have pushed back their rate rise expectation to end of the year. Not that they are going to do it then, because Eurozone is in very bad shape, so they are not going to do it. And what it does is that when FOMC or Fed stepping back, means the dollar strength is not the story. It really scares emerging markets. So that is going to help the emerging market. Of course, each emerging market is different, and they have their own local issues to deal with. However, strong dollar and strong energy is something which hurts most of the emerging markets, and those two are not the big issue at this time.
Manish, if one is sitting in India looking at US markets purely for cues to trade the market, one thing which comes up is the S&P 500, the big market. That index has now shown something which has triggered a correction very consistently in the over the last 3 times this has come up. I'm talking about negative triple divergence, which essentially is higher highs in price but lower highs on momentum. This indicator, whenever it has shown up, at least the last 3 instances, has resulted in between an 8 to 10% correction. It's shown up last week. So in the near term, I don't know if you track the technical stuff, but is that, for whatever reason, are you anticipating a correction in the short term in the US market?
So let me say, I don't track that particular technical that you're talking about, but I think I do look at resistances and support. So what you have seen recently is that S&P bouncing down from 2800 level, and if you see on the chart, that's a very, very strong resistance. Now, what it means is that the EPS, earnings per share numbers priced in currently, which is around $172, and if you put 16.5 multiple, then it goes to 2,800 level. For S&P to really go higher from here, few things have to happen. First, obviously, the U.S.-China trade deal has to come to a conclusion where it looks like that they're not going to have any more tariffs. All the tariffs.
And Manish, is it possible that one fine day, we hear that they've reached some sort of a deal? I mean, are we at that point where any day now it'll be a sudden announcement and we get some sort of a deal between both countries?
I would say that towards the end of this month, because even the Chinese, they are very wary. Remember, the deal will be signed between Xi and Trump, and China does not want to send Xi all the way to Florida, to Mar-a-Lago, and then for Trump to change his mind. So something has to happen before, otherwise China will never go and do this big meeting. So I would still give it a few weeks, but probably by the end of this month, if not before, I would say that some sort of deal has to be concluded because it is in both sides' interest. And they are already making a very good progress. But for it to be signed, that has to be at the heads of the state level. And that is what we have to wait for. Now, that doesn't itself mean that S&P will go higher automatically because earnings have to also come. But that will be a significant thing. And let's say in preparation for that, if both sides say they're getting rid of all the tariffs that have been put so far, that will be extremely bullish. So those are the things one has to watch out for, I would say, largely.
Manish, what about Brexit? 3 weeks to go. There is still no sign of a deal as of now. I know there is no direct linkage to, say, India, but if there is a disorderly exit or there is chaos there, it strengthens the US dollar, which is negative for emerging markets and flows into countries like India. How worried should we be about what's happening at the Brexit front?
So what I would say, you're absolutely right in saying that, if there is a no-deal scenario and there will be some short-term problems in the market, and that should be negative for equities. However, it's my strong belief that the no-deal scenario is not going to happen. And it is not going to happen because both sides, EU and the UK, do not want to have that scenario realized. So what you are seeing, as with EU and negotiations, they always do the deal at the 11th hour on Sunday, midnight or 2 a.m. I hope it is not going to be 2 a.m. on 29th of March, but I do see that this is going to go further, and then they will agree either to an extension, which again takes the no deal off the table, or a deal which then has to be passed through the parliament, and that may take some time for legislative process to go through. I do not see a no deal scenario, and that is because largely it doesn't benefit either side, and it hurts EU very badly as well. And it damages their credibility. And you know what is happening in Eurozone. I mean, they are in big trouble in terms of growth. Germany has just escaped the technical recession. Italy is in a recession. France is running a 3.4% deficit. There's no way they can afford to not do trade with the UK.
Manish, it's a pleasure. Thanks very much. Appreciate you joining in with essentially some cues and just a general sense on what is in the mind of the market at this point. Power Measures, the other stock which is actually buzzing in the back of the company, bagging an order, and it's a sizable order. I mean, for a company which had an order book of about 6,500 crores, they've received an order sized about 1,250 odd crores. This is in Andhra Pradesh. We've got Mr. S. Kishore Babu, Chairman and Managing Director of the company, to talk about this on the phone line. Mr. Babu, thank you for your time. I mean, would this be one of the, single largest order wins for you in some time?
Yeah, this is the single largest order from the Andhra Pradesh Irrigation Department.
And what kind of work would this involve?
This is mainly this irrigation lift scheme is consisting of 6 lifts. And presently, they're providing a water to the above present system HNSS Phase 1, water to be run to the length of 380 kilometers in 10 lifts. Now with this new proposal, the water of 60 cubics of water from Chitravati Balancing Reservoir with a distance of 275 kilometers through Yogi Vimana Reservoir, then the entire saving will be around 100 plus kilometers instead of 386 kilometers. Now once this project is completed, the water will travel with only 275 kilometers.
Okay. Mr. Babu, this is a joint venture which has won the order worth 1,238 crores, right? What is your holding in this particular joint venture and therefore the revenue that will accrue to you?
90%. We are 90% for the qualifications. We have taken a joint venture from SEW. There's a civil irrigation company, and they are 10%. We are 90%. Okay. And we are providing all the guarantees and everything to the government.
So that's still more than about 1,100 crore rupees of an order inflow for you.
Exactly.
Okay. What would be the order inflows we've seen so far in Q4? That's in Jan, Feb and half of March?
Yeah, this quarter, what is the order inflow? Exactly, it will be, with this, it will be around 2,500 crores, the new orders this quarter.
Okay, and it would take your order book to?
Order book to now 6,100 plus this 1,100 comes to 7,400. Yeah.
And this would be in terms of what about four times your revenues, the order book?
Order book is now 4 times our revenue. Yeah, exactly.
Okay, and the kind of margins you'll enjoy in this?
In this, yes, we are having the margins of around 15 to 20% EBITDA.
15 to and okay, so this is in line with what you usually make, is it?
Exactly, in line with our registry.
Revenues should grow at what, Mr. Babu? I mean, in FY.
Yeah, with this order, we are expecting one more order in a couple of days from the same AP government, and that will be another 400 crores. That is also.
So you're already you're already the lowest bidder, is it?
Yeah, we are the lowest bidder. That is the engineering college, triple IT. It is again sharing with the central government, triple IT order. Engineering college construction in Andhra Pradesh. With that, our order book will go around 7,800 crores.
And it should come in this financial year, is it?
2 years will grow at the rate of 40%.
40% every year. 40% revenue growth in FY 20 and
20 and 21 with this present order book. Because normally all these orders will complete less than 3 years, 2 years, 2.5 years. Yeah.
Thank you, Mr. Babu, for joining in. So that is Power Mech. One of the biggest orders the company has seen, the order inflows in Q4 already at 2,500 crore rupees, which compares with 680 crore of order inflows in the December quarter. The order book stands at 7,400 crore, and plus they're looking to bag another 400 crore order from IEEE. We'll slip into a very...
I don't know how important these numbers are, but I think we should get Manisha in to talk about this. They're saying this is comments from Saudi officials saying that they're committed to oil market rebalancing. Remember, last time we had these comments from, once a while President Trump tweets saying prices are too high, pay attention to OPEC or some such thing. But last time, surprisingly, we had commentary from official commentary from Saudi Arabia saying that we plan to stay on the track of reducing oil production in order to get where we want prices to go. So they kind of pushed back to President Trump's calls for lowering oil prices, and I think this is on those similar lines. But those numbers, I think we'll have to just get Manisha in to talk about that. I think I saw 10 million barrels per day, and they expect that to go down to 7 million barrels per day.
Prices are moving up. So when we started, the morning, crude price, Brent crude was around $65.9 per barrel mark. So just shy of the 66 mark. And now as we speak, approaching the $66.4 per barrel mark. So there has been a 1% increase in the prices of crude. So looks like supply will be constrained, and that could push up prices. 120
points on the Nifty. Let's focus on the rural part of the economy. The government is focusing on the farm sector with the 6,000 per year direct support to farmers, which was announced in the budget this year. They also, of course, are working on a host of other schemes. What's the cumulative impact? We spoke with Siraj Hussain, former Agriculture Secretary, and Arvind Singhal, Chairman of Technopack Advisors, earlier this morning to get a deeper insight on how rural consumption story is really panning out. Here's an excerpt of that interesting conversation.
I think the money is reaching the rural consumers, but let us be very clear that right now, when the first installment of PM Kisan has been disbursed, there are no agricultural operations urgently in the immediate future. So in all likelihood, I think this money will be spent on things other than agriculture. Except for harvesting of wheat and chana and mustard, there is no other agricultural operation nearby. So therefore, I would imagine that the money which has been credited to farmers' account, about 2,000 crores in UP alone, will be used by small and marginal farmers for things like buying shoes or toothpaste, soap, etc. So personally speaking, this money will not go in for agriculture. It will be used for consumer expenditure or some other urgent requirement.
Okay. Mr. Singhal, now to come back to you, since you've heard what Siraj Hussain has said and the others, what is your, what feedback are you getting from all your data analytics? Usually during elections, there is a lot of spending even by the political parties. And then, we have had these MSME packages, SME packages by the banks. There has been a lot of largesse even from policy, and we already spoke about loan waivers and income transfers by the state governments. You don't see any recovery at all in rural demand? Is it not looking better than, say, 2 quarters ago?
Sure. Let me just give you a perspective in terms of the overall numbers. The total merchandise consumer spending in the country in 2019 is about $800 billion US dollars. Okay. 800 billion, that's a merchandise only. If you add some services to it, that like healthcare and education, then it will be closer to about $1,500 billion. Now, if you focus on $800 billion merchandise spending, roughly about 50% is rural, 50% is urban. So let's say about $400 billion is the rural consumption. If you focus only on rural there. The sum total of all the benefits, I'm not talking about the waivers, I'm talking about the subsidies and the schemes and direct benefits transfer. You take a number, you take and call it $2 billion so far, $3 billion. I'm talking $1 billion because crores sometimes can be very, very misleading. So if it is, let's say, $2 billion or $3 billion have been transferred to the hands of 86% of the farm population there. It translates to, at $400 billion, 0.5% of the total consumer spending in the rural area. You make your call in terms of saying how much of an impact is that going to make. I rest my case on the data basis that in absolute numbers, it looks big. As a percentage,